We wait on the president. We've been watching this market rally more than fade. Let's bring in Doug Flynn from Flynn Zito Capital Management now as we watch the, we thought today's story, because it was, Doug, going to be about a bounce back in the markets. But this is what happens in these kinds of markets. I was talking about bear markets earlier, but you get a big rally and next thing you know, you start to fade. I know the other thing that's out there, there's the organization Semaphore has a headline that the president may have told Republican senators today he's open to raising taxes on high earners. In other words, letting that top rate, rather than extend it, let it go up. And then, of course, you have the 104% tariffs tomorrow, apparently, on China, right? 104 you left. But it's true. So what do you make of all of this?
Yeah, there's a lot going on right now, and that's part of why the market's having a tough time digesting it. It was hoping that we were going to get a little bit of recovery on the hopes that some of these countries would start making some deals. But look, these deals could take months to actually work out. So, you know, that's fading a little bit at the end of the day today. But I keep thinking about, you know, the 20% and the bear market. On average, you do have to expect those in the market, if you go back 100 years, about once every 6 years. That's about the average. You have a 20% or more drop. And interestingly, we had one in 2022 and we had one in 2020. So we've been running a little bit more and higher than the average of 20% drops. So it's not out of the ordinary even if we get there. I'm really much more concerned about after we get there if we take another leg down or not.
Interior Secretary Doug Burgum and others there you can see gathered in the East Room. So whether we take another leg down. All right, so let's talk about this a little bit because it's interesting. I was trying to make the point yesterday on the show that this story to me, and you and I actually did a podcast about this a little bit, you know, about the market together. We would talk for like 20 minutes about it, which is interesting, is not the story. And I was thinking about it after you and I talked. It's not necessarily, it is a market story, of course, but for regular people out there, it's an economic story. And if you get to a point where companies start to look at all of this, they just don't know what the heck is next, and they say, you know, the better part of valor here is I'm going to cut back, I'm going to start cutting back on my workforce. Then you have a job story. And that's really what is kind of getting lost in all the tick-by-tick movement of markets. But that said, the markets can tell a story. So talk about that and also talk about why you'd be concerned about whether if there's another leg down.
Yeah. I mean, you do have to separate the market from the economy. A lot of times we conflate them, and so you do need to separate that. And the market's going to react because it's companies that are trying to figure out, hey, am I actually going to build something in the United States, or am I not? Or am I just going to move it from China to India? Or what am I doing? So it's hard to really get behind that. So everything kind of pauses a bit, and that can affect the stock price because no money's really moving toward those things. Now, if we start to have all these tariffs and none of the positives, and the positives would be tax cuts, like no tax on Social Security and all these other things. That's going to go a long way to offset any tariff increase that you may have. But we don't know if we're going to get there because we can't get beyond this tariff discussion. So look, if we take it in the preponderance of everything and you get some tariffs with a bump up, and then you get some offsetting expenses for people, perhaps it's not as big a deal as we think it is, and it doesn't change that much. But we can't even get to those other parts yet because we're so focused on this. And honestly, if all we get are tariffs, that's going to be a negative. And so that does impact the companies, and then it can impact the jobs as those companies maybe even retrench. So that's why everyone focuses on how negative tariffs can be. But it isn't just tariffs in a vacuum, and I think we have to keep that in mind.
Here's the thing. We have less than 5 minutes now in the trading session. You see the numbers. We've faded from an earlier rally. East Room's filling up. We'll take one quick break on the closing bell.